All right, hello and welcome to Camel Finance. I'm your boy Camel, and isn't it amazing how quickly sentiment and markets can shift, how fast things can just apparently take a turn for the worst. So anyway, I'm not too concerned at the moment, and I'm hoping that at the end of this presentation, I can convince you that perhaps if you're panicking, if you're quite upset about yesterday's price action, then it's not as bad as it seems yet. Now that does not mean it's not going to get worse, okay? But as it stands right now, I'm quite relaxed. I haven't really seen much change, to be honest. So I've got a whole heap of really significant Bitcoin news to show you at the end, by the way, like the biggest news I've shown for a very long time. So make sure you stick around for that. I also want to break down this Fed very quickly. It's a lot of tabs, but hopefully this will be quite a fast moving presentation. For now, sit back, loosen up, hit that like button, and let's get into this. So the dollar has likely printed a cycle low. Bob Lucas was calling for this, and you can see that here. A pull down into a cycle low, followed by one more run up, and then he believes that will be the top for this counter trend move within the context of a downtrend, and then we can see the dollar roll over and everything else like risk and Bitcoin and gold do very well. So as of yesterday, the dollar was bid, likely ignited by the Fed, right? Or was this just a logical area? Was this just a logical timing window to see a daily cycle low come out of the dollar? Well, for me, this is quite exciting for two reasons. I'm going to quickly show you that. First of all, we have invalidated this sell side impulse, shown here in red. So we can now move this to here and say this is our next early warning sign for this market. But the good news here is we know that this is likely going to just waddle up to this yellow resistance line and then roll over, and then risk is going to come on massively. So that's the first piece of good news. The second piece of good news related to the dollar is gold. We've sort of been sleeping on this channel for a little while. But I did say all along, the thing I want to see from gold, because I didn't like the angle, this is way too steep of an angle. I said I wanted to see us pop out and then roll over and make one more final flush lower. Well, of course, if the dollar is going to rally, if the dollar's about to rally, that means we finally have our massive buying opportunity for the metals about to be lined up, shown by this green downward sloping resistance line. So wherever this breakout comes, and I expect it to be lower down, maybe in the 1700s-ish, then I think we've got a very nice opportunity to long gold out of the weekly cycle low. So I still expect the metals to be chopping around, do something like this, and then when we get that breakout, we can go long here. This includes silver and the miners, and have what I believe will be a massive, epic precious metals rally as the dollar collapses down towards the 90s. So that's the first piece of silver lining in amongst the darkness from yesterday. So of course, Powell spoke yesterday. He'll be speaking again today, by the way. We also have the JOLTS coming out and non-farm payroll this week as well. Powell is quoted here as saying the new data suggests the ultimate level for rates is likely to be higher than previously anticipated. And of course, this is the narrative for this dip. Remember, every dip has its narrative. But remember, just 1 month ago, okay, there was a 91% chance that we would see a 25 basis point hike. And if you fast forward to today, it's over 71% in favor of a 50 basis point hike. The market just repriced in a single day yesterday. So the expectation now is we see a 50. And I ask you the rhetorical question, what happens if we only see a 25 basis point hike on the 22nd of March? Now remember, it's already mostly priced in a single day that we will see a 50. So if we see a 50, it's not really a big deal. And what if we see a 25? Again, asking rhetorically. So it looks like the new narrative is higher rates for longer, which is bad for equities, right? Well, markets actually beg to differ, and I've shown this chart before. If you've been on the channel, I'm sure you're familiar with it. There is certainly room to run here. I'm not saying we will run, I'm just saying data is the data. The stock market crashes when people least expect it, and right now the expectation of a crash is at all-time highs. I'm a bear as well as Heisenberg here, but we've got to admit, there's too many crash callers out there, and I've been using this same argument for months now. Ever since the lows, I've been saying there's too many bears, and I've been showing the record put to call ratios. Granted, they are currently much more at reasonable levels, much more at normalized levels. But when there's loads of bears out there, it's difficult for me to be bearish. And that is exactly where I sit at this current moment in time. Again, as always, I'm open for the market to prove me wrong. I'm open to flipping my stance if required, but I don't think we're there yet. And we'll get to the charts in a bit to justify this point. This is the exact speech that he gave yesterday from a year ago, word for word.
We understand
We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so.
You can go and view this in your own time. I'll show you what I will do though. I will pull the transcripts for you. And you can see here, again, I'm not going to go through all of these because this is a 24 page, a 27 page, and a 29 page document. But if you want to go and verify this for yourself, just go and pull the transcripts and read them one after the other. Okay, there's not time to do that in today's episode, but read them one after the other. And what you'll see is he didn't say anything that we haven't heard before. Now let's get back to some data. Here's the NASDAQ. By the way, it's been holding above an upward sloping 20-week moving average, something that's never happened in 2022. Here you can see. Back here, we broke above, but this was a downward sloping 20-week moving average. Contrast that with today, completely different look. We also have the NASDAQ's momentum on a weekly MACD trying to push above zero for the first time since January of 2022. The broad Dow Jones Composite has dropped below the 40-month for 1 month in 2022 and now has closed above the 40-month for 5 consecutive months. You contrast that with 2001 and 2008 when the price dropped below the 40-month and never recaptured it until after the major lows were in place. So again, this is just data. This is just data. All the people that are calling for one of these types of plunges are simply premature. So it is amazing how polarizing sentiment is. It is amazing how a small pullback in the stock market, coupled with a recycled speech from 6 months ago and a one-day repricing, can change sentiment so massively. The masses see the end, whilst me and Kushes see one of the best setups I've seen in my lifetime. This is still breakout, retest, looking for that resumption. Meanwhile, we have bullish divergence on the RSI on a weekly time frame and bullish divergence on a MACD on a weekly time frame. Doesn't mean we couldn't roll over, but we haven't actually done that yet, keep in mind. And to reiterate the most important point here, in one day, the market's just priced in an expectation on rates for the rest of the year, and this is how the chart looks. So we'll get to the technicals in just a minute, we'll get to the charts in just a minute, and I hope to convince you that really nothing changed at all as of yesterday. Before we do so, I have massive Bitcoin and crypto news to show you. So strap in for this one because we're going to go deep. First of all, we'll warm up with this. The CBDC in India is already here. As you can see, they have a digital rupee QR code that you can pay with. So you better opt out and you better do it quickly. Over in the US, lawmakers are going to reintroduce a Bitcoin tax reform bill exempting miners and developers from being treated as brokers. So this is progress. This bill was obviously rushed through in the first place, and now they've realized the error of their ways and they're going to undo this bill. So that's great to see. The largest travel company in Latin America now accepts Bitcoin in Argentina, again continuing on with this theme of perpetual adoption worldwide. Here is the Bitcoin money flow index in green. It's turning up. We have bounced off of it just like we did historically. To be bearish on Bitcoin now is, in my opinion, a little bit foolish. Bitcoin has also successfully reclaimed key resistance above the realized price, as you can see right here. And here we go. The US court is likely to overturn the SEC denial of a grayscale spot Bitcoin ETF. This could unlock $5.5 billion in value. We also have John Deaton here saying that after listening to the arguments, he remains confident in predicting the grayscale victory over the SEC. Remember, Grayscale said that if the SEC did not permit the Grayscale Bitcoin Trust to convert their trust into a spot Bitcoin ETF, Grayscale would sue the SEC. Since then, it's coming to light that they are about to win against the SEC. That means they are about to see the Grayscale Bitcoin Trust be converted into a spot Bitcoin ETF. Things get even more interesting when we hop into a Bitcoin chart. Bitcoin is the line chart here in orange at the top, and the candlestick chart is the Grayscale Bitcoin Trust. So you can see, whilst the price of Bitcoin has been in on decline, the price of Grayscale Bitcoin, GBTC, is exploding higher, up over 10% as of yesterday. I've also got this arrow here because if you've been watching the channel, you'll know. Once we got down here, I said, I wonder if this is a day 57 cycle low for Bitcoin. We started to get some kind of a bounce, and then we have rolled over since, and I said, okay, that's fine. Maybe this is a day 63 cycle low. Now, what you can see out of the GBTC, the candlestick chart here, this is behaving exactly as I expected Bitcoin to come out of its cycle low. So there is divergence here because, of course, we have Bitcoin in a downtrend whilst GBTC is respecting the 60-day cycles. If we cast our minds back to this candle here, you can see the last time GBTC pumped, it ignited this move for Bitcoin. Institutions are buying Bitcoin. Institutions are getting ahead of the likelihood that we will see the GBTC trust converted to a spot Bitcoin ETF and billions flow into the space overnight. The last thing to point out here is for Bitcoin's price action to just do something like this would be highly unusual given where the cycle count is. I believe we are seeing Grayscale leading to the upside, and I therefore believe we are going to see Bitcoin pump to the upside. Hasn't happened yet, but that is still my primary expectation. And lastly, before we get into the TA, there's approximately 40k Bitcoin from wallets associated with the US government law enforcement seizures that are on the move. Most of these appear to be internal transfers. However, just under 10,000 Bitcoin that have been seized from a Silk Road hacker have been sent to a Coinbase cluster. So are the US government responsible for this dip? Seems like a ridiculous thing to say, but we can't rule it out given that they are apparently selling some of their Bitcoin via Coinbase. As I said, I think the silver lining here with the dollar is we kind of know what to expect. We know that we're probably going to get a run up to this yellow downward sloping resistance line before a rollover and a massive risk on rally. Is there some pain and suffering in the short term? Quite possibly, but I think we can see the light at the end of the tunnel at this stage. US 10-year yield still hasn't recovered its trend line. So this could still morph into a breakdown, retest, resumption look. Of course, it hasn't done that yet. The US 2-year yield, however, breaking out to new highs, clearing 5% as of yesterday. So Bitcoin still kind of hanging around in no man's land, still looking to see Bitcoin explode higher. Can we get a breakout of this downward sloping red resistance line? Have we first got to run the stops below these lows back here? But of course, get above this downward sloping red resistance line and you will see me add my longs back. So from this point on, I want to propose two things, okay? I'm going to quickly rip through these charts and point out that first of all, not much has changed. And then I know an awful lot of you, I'm getting quite a lot of comments and messages on Twitter to say, use some moving averages in your charts. Look, there's nothing wrong with moving averages. I was initially a moving average trader. That was one of the first strategies I ever developed. But for me, I just don't like them. I just don't like them. I find they just get in the way, and that's a personal thing. That's not to say they're rubbish or they don't work. That's just simply to say when I got loads of lines on the charts, it obstructs my ability to see the price properly. And that's a personal thing, okay? But here's what I'm going to do for you. I'm going to rip through these charts and basically say nothing's changed, nothing's changed, nothing's changed. Then we're going to slap on a bunch of moving averages, and I'm going to show you that things look even better with the moving averages, okay? So strap in, let's rip through this. Here's the S&P. Until we take out that low set a few days ago, then we have a new daily cycle in play. As you will notice, on a closing basis of these candles, all of these, and here, we are still above this line for now. So it doesn't mean we couldn't roll over, doesn't mean we couldn't sweep these lows, but as of right now, we are still in an uptrend comprised of higher lows and higher highs, right? Here's the NASDAQ. So undeniably rejection at resistance, but is this now going to morph into a breakout, retest, resumption of the confluence of support? One, the purple downward sloping resistance line, and two, our blue horizontal box. So it doesn't mean we couldn't come down and sweep these lows. It doesn't mean that, but for now, we're still in. We could easily morph into a bullish look. And as you can see, the damage is not too severe. If you look at this cluster of highs back here, haven't we just broken out, retested, wicked them, and now looking to flip them into support before a possible move higher? Dow Jones, it gets harder to justify the Dow Jones. This is a breakdown, retest, possible resumption lower. So is the Dow going to lead on the way down? Is the Dow going to bounce from here? Because again, there's nothing to say it couldn't morph into a look like that. We just don't know. As of right now, we are still sideways, aren't we? The Russell 2K. Breakout, retest. I said I was looking for a resumption higher to get long. That's still kind of the case. We're still back to square one, aren't we? Haven't swept these lows yet. Could this form a triple bottom before a breakout? Quite possibly. Or is this about to bleed much, much lower? Either way, patience and discipline has kept us from getting wrecked on this trade. So that's absolutely fine. If we hop into the VIX, what do you see? I see a VIX price which is still contained under this green downward sloping resistance line. So it could break out, and that's what the hedge is there for if we're going to get a stock market crash. But again, as I keep saying over and over again, it hasn't broken out yet. FTSE 100 could argue that it's broken down here, could also argue that it's back testing this downward sloping red resistance line and about to flip that into support and move higher. And lastly, we could also argue that we are still range bound, possibly before a move down or possibly before a move up. So we'll see how this goes over the next couple of days. For now, though, this is still a sideways move, isn't it? Again, none of this speaks to significant technical damage. And so now, with my super guppy, which is a bunch of moving averages, the 200 is this blue one here, let's run through this and see what happens, okay? We put the moving average ribbon on, and here what you can see is we are just about hanging on to these moving averages with compression. So a move lower and a flip into grey would be something that we wouldn't want to see from the S&P 500. But as it stands right now, there's a couple of days left. Can we again close above all of these moving averages for the S&P 500? Here's the NASDAQ. Doesn't look too bad at all, does it? Sitting right on that 200-day moving average, sitting right on the 50s and the 20s. This is a constructive look. The Dow Jones is really the only point of concern in terms of moving averages. As you can see, we are currently below the 200-day moving average. We are currently turning the super trend or the super guppy into a grey. So the Dow Jones has got some work to do to the upside. for this to start looking as constructive as everything else. The VIX still in a downtrend, as you can see here. Doesn't mean it couldn't change and couldn't change quickly, but as you can see, not a concerning look in terms of a massive stock market crash. Here's the Russell 2K. Is that or is that not a perfect back test of the 200-day and the bottom of the ribbon? Doesn't mean it couldn't move lower, but as it stands, things don't look too bad. Here's the FTSE 100. Is this or is this not still in a very powerful uptrend? Doesn't mean we couldn't see lower prices. Doesn't mean we couldn't see the bottom of the ribbon tested. Doesn't mean we couldn't even see a move down to touch the 200-day moving averages, but all of these moving averages are sloping up. Here's Coinbase, still sideways, so not much more to say about that. MicroStrategy, slightly lower low. We'll see how this goes over the next couple of days. Need to keep an eye on that for sure. Riot, still sideways, so we'll see what we can get out of this. And Marathon, still sideways, okay? Not a great deal has changed. Here's Tesla. Tesla showing relative weakness. Is this breakdown, retest, looking for a resumption lower, or is this going to reverse up into this box and chop around for a bit? Apple behaving exactly as expected. Once we got back inside this box, we said, are we going to chop around and then make a decision? So we haven't made that decision yet. I would not be surprised to see more chop inside of this range. Natural gas continues to look constructive. So can we get a bit more chop around here and then a breakout next week perhaps? If we can entertain longs for natural gas. So still patient, still looking to see a breakout. We haven't had it yet. This is just range bound. So I hope you found value here today. I hope it wasn't too bad. I'm not saying we couldn't morph into a much more severely bearish look over the coming days or even weeks. But remember, even if we do, all that means is that we're likely on our way to some weekly cycle lows, which are due around the last 2 weeks of the month. And then that should present massive, massive opportunity to get long precious metals. That should produce massive opportunity to get long Bitcoin. And it also should produce massive opportunity to long US equities. For now, I think the important thing to do is remain calm, remain flexible, remain unbiased, and see how the week closes. I'm your boy Camel. I hope you're doing well in life. In the meantime, take care from me. All the best. Cheers. Bye.